Hi, everybody. My name is Money Train Mike. This is welcome to Darwin Investors, the show where our stocks are always evolving, and we plan to evolve with you every single weekend. So we're going to be coming to you every single weekend with our thoughts for the upcoming week. With me today on the show, we've got Magic Mike and Jay. Would you guys like to introduce yourselves?
Hi, this is Magic Mike. I'm a retired physician and have been an active investor for decades.
Yeah, and Jory?
Perfect. Yeah. So going by Jay, and so I'm not a seasoned investor, but been doing it for a couple of years now, and liking to learn and learn new things along the way. But yeah, so that's where we are.
And I'm Money Train Mike. I've been only doing this since about March of 2020. Me and Jay, we dabble a bit in the options, selling puts, covered calls and things of that nature. And he'll do some vertical spreads and that sort of thing. But by and large, this is just going to be talking about straight investing and what we can have, what we think might happen in the upcoming week. And here, just a few minutes ago, it looked like the report came out that Bitcoin is actually having a rough go of it at the moment. Let me go ahead and share my screen and show you what we're looking at here. So Bitcoin price has dropped off a cliff here. You can see it started at what, on Friday it was at 56,000. It's currently 48,000. Apparently it's lost $10,000 in 24 hours as an overnight rout, as apparently the Bitcoin price dropped sharply, plunging to a new low of near 43,000. Crypto lost 10,000 in a 24-hour period. The price either dived as well, falling as low as 3,500 on Saturday. Oh, the price of Ether. Wow, Ethereum dropped as well. I hadn't even seen that. So it's been really solid at 4,000. It was really hard to bring Ethereum under 4,000, and now that one I guess got as low as 3,500. Bitcoin was around 57,000 on Friday, and apparently Wall Street is just selling it off like crazy. So what is you guys take on what does that signal that something like that would happen over, say, the weekend? What do you guys think?
I think it really is mirroring the uncertainty in the stock market, which really started about 3 weeks ago, even 4 weeks ago, where there's been a ratcheting down. And last week, of course, was the worst. And Friday did not help anything. The Federal Reserve, the international concerns, such as the new variant, these are creating some real uncertainty in the market, and you could see this appearing in the stock darlings of the pandemic, like DocuSign, which was the canary in the coal mine. And so people are now taking notice, especially now that Bitcoin has had this big drop.
So basically, we think that possibly Bitcoin is kind of like maybe it's a like you said, canary in the coal mine. It's looking at what's to come. It looked like it's old support for Bitcoin. Let me share this screen here. Its old support was around. Let me share here. Let's go to this screen here. Where's Bitcoin price? It seemed to have some support around 49,000-ish, and right now it's trading at about 49,000. So this thing, I guess, if we're going to look at trading on technicals, it was trading around 49,000. So if it breaks below that, our next stop will be roughly 42,000. So I guess this would be an interesting level to see what would happen. I mean, to see if it holds at 49,000. The last time it sold off really big was right here, Monday, September 6th through the September 7th. Let's see what happened in the stock market on September 6th and 7th. Let's see, S&P 500. And let's look and see what happened to the S&P on that day, September 6th and 7th. So well, it lost about, let me see, it lost about half a percent, so not much really. NASDAQ, let's see if the NASDAQ composite dropped a lot on those 2 days. Well, let's see, NASDAQ composite. See what happened on September 6th and 7th to see if it's following the NASDAQ. I know the NASDAQ had a horrible day on Friday. So
another way I look at it, Mike, is
yeah,
take a darling of the NASDAQ or of the Dow like Apple, and Apple during that September period went from about 156 down to the 140s. So it took about a 10% drop during that period. And that's probably the most loved stock in that group. So if the most loved stock fell, say, 10% during that period over several weeks, I wouldn't be surprised if that happens now.
Yeah, it fell 5% that week. So
and then to take it out even a couple more weeks, it continued to drop.
Yeah, it looks like if you took it out at least another couple of weeks, it went down 8%. You take it out even further to the end of September, it went down 11%.
Right.
So Bitcoin.
Yeah. So what happens usually in my experience is that these slides don't stop in a day or two. They take 2 to 3 weeks to play out. And so my thinking is that what we're really looking at is maybe there won't be a December rally, because if you take it out 2 to 3 weeks, that puts us right at Christmas, basically. And if anything, there's going to be more selling for tax purposes. And the pandemic may even accelerate if we still don't know what the variant is going to really do it. And is it going to, our vaccine's going to help us?
Yeah, and one of the things that I think is interesting about Bitcoin that you don't hear too many people talk about is that it seems to mirror the market. In this case, maybe even predicting what's going to happen. Rather than act as a hedge, it's more, it trades with the market at a more dramatic clip. Like if the market moves 5%, Bitcoin maybe moves 15%. Up or down, depending on what the market is doing. It's not really a hedge on the stock market, say like the way gold is traditionally thought, or bonds, or what have you. So that is interesting to me. Jory, do you own any of the Bitcoin? Or Jay, do you own any of the Bitcoin?
No, I do not. I got out of crypto stuff probably a long time ago. It was back when Dogecoin was a thing. Remember that? Back when Dogecoin was rocketing up, and so was all the crypto was rocketing up at that time point. And that's when I played with it a little bit. You know, it was going up the entire time, so it was hard to lose money on that. But I got out of it before because it was too hot for me, and you know, too much of a gamble. And I haven't really looked at it since. So. It's interesting to see how it's been doing and the effect on the overall market with it. But yeah, it definitely looks like it could be a predictor for going into next week. That's for sure.
You know, there's another interesting thing that's been happening. If we go back just this last 12 months, is that gold has basically followed Bitcoin, which is interesting that it should be a hedge against inflation and uncertainty, but it actually has followed. If you go to September of this year, it fell when the stock market fell and when Bitcoin fell. And if you go to the last 6 weeks and you use GLD, the gold equivalent that holds the metal, it's dropped from 174 to 166 during the same time period. It almost has the same curve. So gold, Bitcoin, and the market have been following each other.
Interesting.
Yeah. So can you guys see the screen that I'm showing right here? This is Ethereum, and the article said it dipped down to like 3,500, which it according to this chart on Saturday, it went down to 3,700. But again, it's back up at 4,155. It's got some really outstanding support at 4,000. Almost like if you see it dip down there, maybe it's not an awful idea to nibble a little bit if you see it get below there. The next stop after that would probably be around 3,500. So it's, and then below that, I'm guessing it right around 3,000. So it goes in $500 increments, it appears. But yeah, that's, again, that could be a sign of things to come. A little bit of pain on the way, hopefully not. So let's talk about what happened on Friday with the DocuSign NASDAQ sell-off and all that stuff. DocuSign, for people that don't know what it is, it's a digitally signing. I don't think that we're ever going to go back to the office and start like going into places and like physically signing things anymore. Like going to it, I think that those days are kind of, they're going to be in our rearview mirror. We're going to do a lot more e-signing. I even went into CarMax and bought a car, and I use DocuSign in their building. So I think a lot of people like those products. But nevertheless, it had a 25% beat on earnings, a 2% beat on revenue. It missed on billings by 3%, future billings, and it missed on future guidance by 2%. Before that, the stock went down 42%. Seemed a little bit extreme, but it took some others with it. It took Adobe with it. And it took really a lot of the NASDAQ with a lot of high flyers, the names like CrowdStrike and Zscaler and that sort of thing. What do you guys think of going forward? How would you invest in stocks like that going forward?
For me, I would sell all the high flyers that don't have true earnings, that don't have a PE, because they're going to be the first ones to be dumped, and they're also the ones that have been bought on margin. So those are going to go first, in my opinion. And the darlings of the Dow and the darlings of NASDAQ that make up most of the NASDAQ index, like the Apple, the Microsofts, the Google, the Amazons, the Facebook, are going to correct. They will not, they won't dive like the others, but it would not be unusual for them to give back 10 to 15% during this crunch. And when they do, the way to make money on these is to wait at least 2 to 3 weeks to make sure that the crunch is over, and then to begin to buy it back in small increments. But take your time, because at this point, cash is going to be very important to have in your portfolio.
Yeah, and you mentioned the margin. I'll pull this up here. This is from Yardini Research, and we're looking at margin debt in America. And you look at, like, back in 2000, it was about 300 billion. And basically it got really high in 2008 before the big crash. Oddly enough, it got around 420 billion. That is funny. It spikes right before big crashes. But it spiked here and it didn't really crash. And it got up to 660 billion in 2019 before it pulled back. But right now it's at about $1 trillion. It's going up in a straight line. And for me, that might have something to do with some of the selling that we're seeing. There's got to be an awful lot of margin calls going on right now. So I'm thinking some of these trader stocks, retail trader stocks, they might be feeling that.
Yeah, I think you're right, Mike. I think for sure they're feeling it. The NASDAQ has been up about 20+% this last 12 months.
Mm-hmm.
That's pretty much unprecedented to get that kind of return in this period of time. Of course, it came on the back of the pandemic when things got crushed in March 2020.
Yeah.
But it is now pretty much at the top of it's pretty much at the top of the mountain, historically going back decades when you have this kind of move. And of course, we don't know how the pandemic's going to play out. The pandemic can change all of this in a heartbeat. If the pandemic gets a lot worse and the vaccine doesn't work, then the market's going to fall even more than what it fell in September of this year.
Yeah, you mentioned the NASDAQ. I'm looking at a chart right now. It was up 119% from pandemic lows, but even before the crash, it's still up 55% from pre-pandemic highs.
Yeah.
So it's screaming higher. So it does seem that that it does seem a little bit like it's had a good run. It's had a good run. Maybe time to pull some money out, certainly out of these high flyers, kind of wait for the margin calls to all those things. So the retail trader is probably going to be the one that's got a lot of margin. You know, it's probably not going to be somebody that's got, like, say, a ton of money, but it's going to be your Robin Hood person, right?
Yeah, of course. There will be hedge funds that'll get hurt here too. Some that have speculated on high flyers, who have a lot of high flyers. Kathy Wood's group is showing what's happening when you have a lot of high flyers in your portfolio. Even though she has a great track record, she's now run into a quicksand with these companies. Yeah, they're great companies, but they could easily drop significantly and take years to recover, not months, years.
Is there any company in particular, either you guys, that you would be looking for a large drop? It's the retail trader stocks, like, that you would look for a large drop, say, coming up, that might be an interesting purchase for you, something you've been wanting to get in, but you thought it was a little too hot, and something you're kind of keeping an eye on?
I like the idea of maybe Restoration Hardware, because it does have earnings, it does have cash, its debt is low, and it has a product people like, and it's corrected about 25 to 30% in the last 3 months, and it's had good earnings all along. It has good management, and the people that buy a Restoration Hardware are generally people that are in the high income brackets, because their furniture is 4 times as expensive as Costco. But on the other hand, it's a higher quality. Now, whether it's worth 4 times more, that's debatable, but nevertheless, it reports this week, and I think that it's one that I would be willing to put maybe a third of what I would normally put into this company and wait to see how it does. And then if it corrects with the market and drops even more, then you could buy it in small increments to get to your 100%, maybe over the next 6 to 8 weeks. I think the carnage in the market will subside probably within 6 to 8 weeks, unless the pandemic becomes a second major pandemic. If we can look to 2020 March and see what happened when the market corrected then, and how long it took to start recovering, the recovery was pretty quick. You know, it didn't take a whole long time for people to say, well, gee, we're going to have a vaccine and things are going to be better. We're going to have more masks. We're going to have more ventilators. And so they started to rise quickly during that period of time. So that would be one stock I would be interested in. A second stock I'd be interested in is Disney. I don't think Disney's going to recover overnight, but Disney, I can guarantee you, at least I think, 6 to 9 months from now, you'll wish you would have had bought Disney at the 140 level.
I agree with you. I think that Disney's also a popular retail trader stock. It's one of these that could be hurt by a large amount of margin calls. People, I don't know about Restoration Hardware being a retail trader stock, though I do think that it's definitely a stock that I'll be buying this week. I am not a panic seller. I'm a panic buyer. So when I saw DocuSign drop like it did, let me see here. I gotta stop the share. When I saw DocuSign drop the way it did, I went two-fisted into DocuSign. I just can't help myself with stuff like this. Sometimes it works out, more often than not, it doesn't. When PayPal did that whole Pinterest thing, I jumped in with 2 feet into PayPal and it hurt me in the end. And I've done the same with DocuSign, but I'm going to be selling out of my DocuSign position in all likelihood tomorrow. And I'm going to take that money and I am going to do just what you said there. Actually, I am going to put it into Restoration Hardware. And here's some things I like about Restoration Hardware. One is like what you alluded to, is that that they do report earnings on Wednesday, and they've been going down. Like you said, they're down from $680 a month ago to $525 today, and no real good reason for it. We can see that their price to earning ratio is reasonable. Trailing 12 months is 31 and the forward PE of 20. We could see that that if you look at their bank statements here, this is one thing in looking into Restoration Hardware, we talked about it earlier, something I really like. And here's something I think that Wall Street likes, and something that they penalized PayPal for was like lowering profit margins. So when you look at a company with an $11.5 billion market cap, it's trading at about 4.5 times sales, it seems. But when you look at their margins here, something that people like, their net income is 272 million. 220 and 136, like in a row there. And when you look at that, what we're seeing is that 273 is a bigger piece, it's like almost 10%. 220 million of 2.6 billion is a little bit less than that, and 137 significantly less than that. So we've got a company that's profitable, a company that's growing, a company with pricing power, and one with expanding margins, possibly due to that to the fact that they can charge more for things and people will buy it anyway. They have pricing power. And so I agree with you. I'm going to sell my DocuSign a position because you don't have to make your money back where you lost it. So I'm not necessarily going to buy a whole bunch of DocuSign, but I am going to go into Restoration Hardware ahead of earnings. I think that's a fantastic play.
Yeah, and I agree, Mike. I think Restoration Hardware is a fantastic play. And when do they report earnings, would you say?
Wednesday after close.
Wednesday after close, yeah.
Yeah.
I think I might take a little bit out into that too. Right. See, I'm not in the buying mindset right now, just because of how everything's, been cruising. And I honestly haven't been paying as much attention just because everything has been going downhill. I've just been kind of letting what I have, ride. But I think Disney is a great future stock to get into, especially where it's at right now. It's at 146.22 right now, and that's a really great price to get in with Disney. I agree. Another stock that I'm looking into, it's something that my Money Train Mike knows all about this stock, Revolve stock.
Yeah,
that's one of my favorite stocks. For those who don't know, Revolve is it's a clothing and I believe some makeup brand, very popular with retail, and they've just been crushing it ever since last year. They've just been crushing it, and they're down significantly right now because of all of this dipping, and but that they continue to show strong earnings, strong revenue, and with Christmas time being around, people buying these expensive clothes and products like that, I could see them continuing to go up into the next year. So that's one I'll be eyeing, definitely. I'm not sure if I'm ready to buy them just yet, but one that I'll be looking into for sure.
So I'm looking at some things about Revolve. Now, a funny story. So I bought my daughter Revolve as a high school, like a Christmas or like a graduation present. I got her $600 worth of Revolve stock at $12. And she sold it at like $16 for profit. And then it got up as high as 80. When I always make mention to her, see how good the stock market is when you catch something nice and low. She could have made $4,800 on it. But let me show you something about Revolve I just noticed that had me kind of concerned. I'm going to go into their chart real quick. And then I'd like to close with one thing after this, and it'll be about Tesla. But let me going to share the screen here again. And with Revolve, it has been a nice moneymaker, and it had a really good run. What I don't like about it is that it's come down $20 million at trading 12 months revenue. It seems to be a shrinking company, like sales wise, and that could explain why the drop in the share price. It's $581 million revenue. Let's see, the market cap is 4.8 billion. So it's trading little like about a little less than 10 times sales. But here's what concerns me is that price to earnings trailing 12 months is 54, forward is 58. It seems to be a bit of a shrinking, like they expect it to do worse next year than they did last year, possibly because maybe some people look at it as, say, a pandemic play, maybe sort of in the same. Yeah.
I mean, people buying clothes during the pandemic. I mean, of course, people were spending lots of money on things people were just spending money during the pandemic. They were trying to do something to get their mind off the pandemic, and buying clothing was one thing, buying electronics was another thing, etc. So yeah, I agree with that completely.
Let me ask you guys something. At what price would you guys get into Tesla? Like start really considering opening up a pretty good position in Tesla? Because I think that of a retail trader stock and high margin and a lot of selling off this week, possibly, I would think that Tesla might become kind of a victim here during this. One of the bigger victims, I guess, if there was going to be a huge retail trader sell-off. It's currently sitting right around 1,000. Where would you guys find interest in that?
For me, I'd find interest at a level of about 750 to 800. Because if you look at its chart for the last 12 months, in September and October, it was trending up, slowly trending up, but then it hit that peak when it announced that the Hertz sale of cars to the rental company. And it went up to about 1220 or something like that.
Yeah, it got up quite high.
And but that peak came down right to the 1,000 level, and now it's just been sort of hovering between that 1,000 level and 1,050. But I think the real support level is in that 800 level.
Yeah, I agree with you. I'm going to come in. I'm going to start nibbling right if it gets below 800, which it could actually happen, oddly enough, like this week, if there's going to be a huge sell-off in these types of retail trader starts due to margin calls and the like, but also because of this conspiracy theory that's supposedly it's going to take place on I'm calling it a conspiracy theory, but it's the 12-9 conspiracy theory that people on different social media forums seem to think that the stock is going to split on 12-9 based on some kind of cryptic clues that they believe that's coming from Elon Musk. And then this is also based on previously leaving cryptic clues, like when Elon Musk said the stock is too high. And I think originally they thought this was at 8:11 a.m. And so basically the stock price happened on 8:11, a 5-for-1 split, May 1st. And if you go on here, you see a lot more of these, like a lot more numerical type of things. They're kind of leading to a split on 12-9, meaning that Elon Musk got his two favorite numbers are 420 and 69. If you add them up, it's 12-9. But more importantly, he starts playing along. He says we have 129 orbital flights. He's like commemorating 129 flights that happened on November 13th. People are like, that's a weird number to celebrate, 129. So they're thinking again, it's 12-9 is the split. They're really reaching on this one, 12 million pounds of thrust, nine thrusters in the middle. They're like, oh, that's 12-9 again. Different number tricks with the numbers of shares he's selling. And probably and then he'd also play along and say, basically, as people are coming up with these things, if you multiply those shares times 3, you get 12-9, this number. And this isn't an Apple phone, which actually adds up to 12-9-21. And then and Elon Musk is helping you decode this through Twitter. And then finally, he liked his own tweet, an old tweet from the 12th of September of 2021. He just randomly liked an old tweet of his. And again, that alludes to 12-9. And my feeling is that if this thing does not split like people think on 12-9, that we might find that Tesla sells off a lot, that people are waiting for this split, and that might be why some people are just kind of hanging in there. I don't know. Any take on that? Just kind
of. My thought is that they played razzle dazzle with the numbers in this conspiracy, what I would consider a conspiracy theory, because Elon Musk has sold off approximately $10 billion worth of stock in the last few weeks. Why would he be selling stock before the end of the year, if in fact it was going to split, and historically it's always jumped up when it splits, would he be willing to give up $3, $4, $5 billion just to sell it a little bit early? Or would he even be selling at this point at a really nice high price? I mean, he's had tremendous appreciation in the stock in the $1,000 level. And so my thinking is that he's not going to split the stock because of what he's already done selling his stock.
Yeah, the last time he had a split, the stock jumped, I believe, 87% in rapid fire. So why would he sell today if he was planning a split on the 9th? I think we're headed for a whole lot of disappointment, I think, in Tesla this week if people are expecting a split. All right, guys. Well, any final thoughts? Mike, I know you talked about the stock you were going to buy, Restoration Hardware, or at least going to look into it. Again, we're not financial advisors. This is what we're doing. These are just moves that I make personally, and I make some good ones and I make some bad ones. I'm going to be looking into Restoration Hardware as well ahead of earnings. I'm also going to be looking at JP Morgan. It's had a little bit of a pullback. And the banks kick off earnings season again in about 5 weeks. And I think that they're going to, and I also believe that interest rates could end up going up, maybe even start talking about boosting interest rates a little bit early. We have the consumer price index comes out on the 10th. If inflation is still, running, I expect inflation actually to pull back a little bit on this new index, and the reason why is because of the cost of oil has gone down. I think energy prices have gone down. I think it'll tail back just a little bit. It was 6.2% last month. I think it'll be a little bit less this month. Year on year, I think that we're going to get a quarterly decline because of the weakness in the energy sector. I think that you had a good call on Disney. I think the consumer cyclicals, your Expedias, your bank is a cyclical, I guess. But your consumer cyclicals like Expedia and Disney and your travel stocks, they've kind of bottomed out. It does feel like this is a good time maybe to get in. And that's my take. I'll probably be looking at Expedia. I'm going to see Tesla, see how far it falls. I'm going to get Restoration Hardware. And then I'm looking at JP Morgan at current levels. I like it at the current level, actually, just right now. All right, and that's what I'll be looking at this week.
I would be looking at dumping all my losers in my portfolio to raise cash. If they don't make it when the market was rising, what do you think will happen when the market starts to drop? And I would try to produce as much cash as possible by selling your losers. You can take it off in your taxes, and you can start rebuying stocks that you love after the first of the year that have corrected. But I would try to get as much cash as possible. I would try to get to at least 50% cash if possible because of selling losers.
Yeah, that's a good point. That's really good. What about you, Jory? What do you got going on this week?
Yeah, I'm already at 50% cash just because of how the market's been going right now. Let's see. But as far as buying, I mean, there's not a whole lot that I'm looking into right now. I like what you guys have been saying about Disney and about was it JP Morgan you were saying, Mike?
Yeah, JP Morgan's at a pretty low rate relative to its own, valuation in where it's been trading here recently. Yeah. And they report earnings in about 5 weeks. I would expect that they're nice. And I think that interest rates can only go up from here.
Yeah, it has to be, right? I know I'll be staying away from DocuSign, that's for sure.
Good play. I got to sell all mine.
I'll be staying away from that. It's interesting about DocuSign because it's, like you said, you don't see us going back to, signing things in person. It's going to be, digital signing is the way of the future. And I agree with that completely. It's the question is DocuSign going to be the winner of that? Because, Adobe has their own signing thing. And you can kind of look at it as like how, Zoom itself is doing. It's just, because Zoom was the big thing during the height of the pandemic, but then Microsoft Teams came out. And now Microsoft Teams is dominant. If any business pretty much uses Microsoft Teams because it comes with Microsoft, and who doesn't have Microsoft, right?
Right.
So, and same with Adobe. Adobe, I mean, not everyone has Adobe, so DocuSign might, have that, edge up a little bit, but I know a lot of businesses pay for Adobe, so
So
hard to know.
So Adobe reports in 2 weeks. I'm sure we'll talk about Adobe next week. They report in 2 weeks. They're gonna have very interesting, a very interesting day before that. Now you were talking about Zoom. That made me think. I always want to close things up. It's always hard for me to shut up and close the screen. But it made me think about this other stock here. And tell me what you guys think of Teladoc. So to me, DocuSign, Teladoc, they're kind of similar in the sense that they're both pandemic plays, but I think that they have staying power. One thing I noticed in the statements here that I did not like about Teladoc that I do like about DocuSign. DocuSign is going to go profitable the very next time they report. So I'm telling you, I am buying DocuSign before they report their next earnings. I will own a lot of it because this is gonna be the first time they go profitable, and we all know what happens then. If you look at like what happened to Wayfair, what happened to Square, and that sort of thing. But if you look at Teladoc, and I haven't really ripped into this too much, but look at how much they lost 45 million last year, and before that was 99. So their losses are expanding at a pretty alarming clip.
They're a poster child for the statement that growth eats capital. Now, they are a very good, from my experience in medicine, they are a very good company. However, they're spending buckets of money to grow. So they're basically buying customers, and that will continue for some time. They may be profitable 2 to 4 years down the road. So there's plenty of time to wait for them, because the market will actually punish them for using money to grow at this point. And let me go back to the DocuSign story before we close out here. DocuSign, before the pandemic hit, was trading at about $85. And we know that during the pandemic, it grew customers because we all signed electronically. So if it drops, my point is, I think it's going to continue to drop. But if it drops down anywhere near the $90 level or $100 level, this is a company to start buying, because they have profits. They will grow. They will become profitable. They just went too far, too fast.
And they have something else that I thought was incredibly impressive. And you know how we said we're not going to go back to signing things in person again? They have 121% growth in like basically people sticking around over last year, meaning that even if nobody else, because they renew their subscriptions, if nobody else renews a subscription at all, they'll still grow 21%. If they get no new customers, zero.
Yeah, and we all know they're worth more than what they were at the time the pandemic hit. We all know that.
Oh yeah, it's growing like crazy. I mean, if you look at we could look at their numbers. I love their numbers. It's a company that I love the company. I don't love the stock right now, but man, I love this company, and I certainly love it for the future. And I'm definitely going to be buying some ahead of the next earnings. But if you look at this is impressive to me. What they're doing at DocuSign, and why I will like it, those levels, the ones you were saying, the pre-pandemic levels, because they'll come down to 90. That's the next stop for them. So if you look at their statements here, they're right now currently losing 3 cents a share, right? But that's way down. Their net income it's 3 cents a share. I could break out their 8K if I don't know. We'll go to their investor relations page. I can show you this, and you know what? This might be interesting. Tell me how to if you guys know how to read this thing. DocuSign investor relations. So if you look at their investor relations page, and then you go to their let's say SEC filings, and then you go to their 8K here. Is that right? Yeah, right here, their 8K. Let's get this here. Open the file. I guess I don't. So if you look at this here, and we run down to their numbers, where are they at? Right here. And you can see there, let's see here, 2020, hold on a second here. Let me go to GAAP gross margin. Hold on a second here. All right, right here. So if we look at DocuSign, and I think this is all you need to know about the trajectory of this company. This is what makes this different from Teladoc. So if you look at it in the 9 months ended 2020, they were losing 92 cents a share. They're currently 9 months, they were only losing 20 cents a share. In the last quarter, they only lost 3 cents a share relative to 31 cents a share a year ago. So this company is big time on the path to profitability. Now, one thing I don't understand is this weighted average number of shares used in computing the loss per share attributable to common stockholders. What the hell does that mean? Does anybody know what that means? This line right here? Because they basically look like they're net positive, like they should be making a profit, but they subtract this weighted average number of shares used in computing. If somebody knows what this means,
the number of shares can change as people go from warrants to shares to options to whatever. And so the number of shares can change almost from day to day. So possibly that's what they're saying in there, that the number of shares have changed. So your numerator and denominator are changing.
Okay.
That's my thought.
Well, yeah, because you see the gross profit here is, I mean, they're making almost 430 million. That's their gross profit, which is way exceeds their operating expenses. No, it doesn't. It total operating expenses less, and that's because general and admin is staying pretty okay. So they're not spending any. So these fixed costs aren't rising. Research and development, they are researching a lot more. They're developing. That's a good thing. You know, I know that they've got the notary thing now. You don't have to go get yourself a notary. And they've got other little products that go with their signing that makes them the leader in this industry. But again, if you can afford, I could get a calculator out, but it looks like this is probably going to be about 25% higher, no, 30% more in research, but they're making more than 30% more in revenue. Yeah. So they're putting it to good use.
Yeah, as I see DocuSign, they're in the ninth inning of growing and not eating capital.
Right. Their fixed costs are staying about the same.
Yeah, they're in if a baseball analogy is good, they're like at the end of the game of chewing up capital to grow. And at some point, they're going to start making a real profit and not have a loss per quarter.
Mm-hmm. And analysts expect.
I wanted to say one thing about another stock I like that's coming up this week or soon is Lululemon.
Oh, yeah.
Lululemon, I think, is the best premier clothing company for women in yoga and workout. I see it everywhere. And young kids, college kids, high school kids, and all kinds of women love this. When I visit our local workout place, 90% of the women have this on. And also when I've actually done my own channel checks throughout the country, I go into Lululemon stores just to take a look. Because I first got interested in Lululemon 20 years ago. When I first saw it in Vancouver, BC, my wife and I walked into a Lulu store not knowing what it was. And she fell in love with that brand 20 years ago. And it's only continued to grow. It's under great management. They have, the last time I went into it was 2 weeks ago, and people were lined up at the door for it to open.
Yeah, and it's let's see when they're reporting earnings here. Let's look here. The third quarter expected Thursday.
Yeah.
After close. And it's had a little bit of a rough go of it the last month. It's had a high of 45. It's currently trading at 430. It's growing at a pretty nice clip. It's looking at about little over 30% growth year on year. So that's nice. Yeah, this is one to keep an eye on. And they report Thursday after hours. So you're right. That's another one that could, because it's been so bad going into earnings. it's one of these that could get a nice bounce coming out of earnings. I
Yeah,
still think I like the
I-
restoration play a little bit more.
Yeah.
Wow, these guys generate a lot of cash. Look at that, $4.4 billion in stretchy
The way
pants.
I look at it is that if you don't own it, I'd buy it about a third before it reports. Depending on what it reports and the way the market's acting, I would continue to add to it, but I would be careful as you add to it because it may get sucked down with the market.
Yeah, how about you, Jay? How are your Lululemon pants hanging in there? Are they good quality for you? Yeah,
Oh, yeah.
mine are good. They ride up a little when I sit down, but I generally speaking, I like them.
Oh yeah, they don't degrade. They're good for years now, but
You know, I poo-pooed them for years for men, but last year I bought a couple just to see, and they're my favorite workout clothes.
You're not one of these guys that's riding a bicycle wearing these, like looking like Lance Armstrong in your Lululemon, are you?
No, I'm not. They have all kinds, they have all kinds of pockets. They're sort of water resistant. And they, in my opinion, they fit great. They're expensive. They're at least 2 times more expensive than a Nike workout type, but I think they're better actually.
Yeah, and well, they're trading pretty rich. They make 4.4 billion in sales. They're trading at a $56 billion market cap. So that's, we're looking at about 13, 14 times sales. They're trading at 68 times earnings. This is, but they do have some impressive growth, and they have had a rough go of it going into their earnings call. So they might be one to keep an eye on. I'm still, like I said,
Yeah.
more interested in Restoration Hardware. That's probably gonna be the one I'm gonna do. That's gonna be my move this week. We'll see. We'll come back next week and we'll see how we did in our moves for the previous week. So with that, guys, let's go ahead and we'll sign out, and please, like I said, like and subscribe. Ring a little notification bell if you'd like to know when we're gonna post these videos. We're gonna be doing it once a week, and we're basically like we said, we're Darwin investors. We're gonna be evolving with the market. So we'll see you guys next week.
Sounds good. See you guys.
Bye. Good luck.